Hello everyone. Today is August 13th, 2024. It's Tuesday and welcome to Unday Radar Talks. Tesla's stock price fell 1.3% on Monday, with the largest intraday decline of 2.6%. Its trading volume was 64 million shares, and the turnover rate was 2.3%. Both figures were higher than the previous trading day, indicating that the trading activity on that day increased. But the market on Monday did not seem to have plans to push the stock price up. The stock price fell deeply to $194 twice, but was pulled back, indicating that the market still hopes to maintain the stock price at a certain level. But the question is why the stock price does not rise? From the daily chart of the stock, we can see that the stock price rebounded at $181 on August 5th. The reason is that May to June was a period of consolidation for the stock price. The market accumulated a large number of transactions in this price area, so this area gave the stock price a strong support. In addition, due to the sharp drop in the stock price, its trading volume also increased significantly, indicating that a large amount of capital flowed into the market at a low level. However, the stock price has always fluctuated in a small range in the following 5 trading days, with a median price of about $197. The stock price is consolidating in this price area, indicating that the company's stock price has officially entered a downward trend before the release of the second quarter earnings report. The force that drove the stock price up has already exited the market in early July. The previous upcycle has ended, so it is impossible to counterattack immediately in the next upcycle without sufficient ammunition, which is completely different from Nvidia's stock. So what will the stock price do next? Let's take a look at the 15-minute chart of the stock. Since the stock price rebounded from $182 on August 5th, the stock price has always been around $197. During this period, you can clearly see that there is significant trading volume when the stock price is high or low. In fact, the market does not seem to want the stock price to fall further, but the pressure of the shorts has not been fully released, so the market is forced to digest these chips at this position. Of course, if there is any disturbance in the market later, the stock may usher in a larger sell-off. But now the optimism is that the stock price has not fallen further. If the economic data this week is better than expected, the market may push the stock price to break through this price area to a higher level. Let's take a look at the capital flow data of the stock. We can see that on August 1st, the stock fell 6%, and its capital net outflow was $1.1 billion. But the trading volume on that day was lower than that on August 5th, indicating that the proportion of capital outflow was very high. On August 5th, the stock price fell 4%, and its capital net inflow was $500 million, which is consistent with the change in its trading volume. It is worth mentioning that on August 7th, its capital net outflow was $300 million, but the stock price did not fall afterwards, indicating that this may be a reverse entry capital, at least part of which was digested by the market bulls, which is consistent with the performance of the 15-minute chart of the stock. Let's take a look at the market position distribution data of the stock. We can see that due to the sharp drop in the stock price from July to August, the current position profit rate of the stock is only 31.8%, and most of the positions in the peak part of $181 are still from before July, and most of the positions in the whole are above $197, which also explains why the stock price has not risen sharply. However, as time goes by, the head position will gradually move down. More positions will accumulate in the $197 area, which is the key to whether the stock price can challenge $216. At the end of July, the stock price fluctuated between $216 and $230, so a large number of positions were accumulated in this area. If the stock price rebounds, then this area is a key resistance position. As for the peak position of $250, it is still out of reach. Let's take a look at the weekly chart of the stock. As mentioned earlier, the stock price found support at $181. But the total trading volume last week was not much, lower than any week in July. So as a rebound force, it seems not enough, which also doomed the stock price rebound to encounter great resistance. But we also see that the middle price of the stock price from January to June this year is $181. So relying on the support of this area, the stock price is likely to rise further this week. Let's go back to the daily chart of the stock. Through the above analysis, it seems that the stock is not currently negative. Despite seeing some mixed factors, the fact that the stock price has not fallen further proves that the bullish forces in the market are trying to regain pricing power. Maybe the stock price will continue to consolidate in the $197 area, but I think the stock price will eventually seek to break upward, and the next target price range is between $216 and $230, and my setting is $220. Okay, guys, this is my price prediction for Tesla stock. Thank you for watching. If you like my analysis, please click the subscription button and give a thumbs up. I will bring you more latest price predictions for hot stocks later. See you in the next video.